Hello from sunny Istanbul before the winter snow starts. This is our last sunny day, and it's thanks God it's Friday day, but unfortunately, Turks have very little to be happy about. As you might have heard, EU has imposed some sanctions on Turkey. These are light sanctions, but there is more to come because of our quote unquote illegal drilling activities in East Med and our uncooperative behavior in Cyprus conflict. Again, not my views. I have expressed my views on all of these issues below in my previous videos. And numerous press sources report that Mr. Trump is going to do a final favor to his pal, Mr. Erdogan, by passing very light sanctions, such as sanctioning a few names in Turkey who are involved in the defense industry uh, and sort of preempt the NDAA bill that's being prepared by the Congress, which involves CAATSA sanctions for Turkey, which are, of course, heavier. And in my view, these sanctions are only the beginning of the end. There will be more to come until Erdogan is forced to capitulate or he breaks all ties with the West, moving to the orbit of Russia. Since the latter is unlikely because of Turkey's extremely fragile external position, the title of this video is We Need IMF, and we need IMF urgently. Let me tell you what these sanctions will do before I move on to the rest of the Turkish economy to explain what a sorry shape it's in and why we need a standby with plenty of money and credibility from IMF. The sanctions by themselves are not that important. They're symbolic. I mean, they have no impact on the economy. But of course, the markets don't think that way. This is why, as I shoot this video, which is Friday, it's Friday the 11th. Let's bring out the chainsaws, guys. It's really the Friday the 11th. Oh no, that was Friday the 13th. I'm sorry. No, honestly, I'm drinking mineral water. I can show you the bottle. It's Akmina pure mineral water. That's all I'm drinking at this point. And good old coffee. Uh, I'm sorry. I digress. Uh, the point is, Turkish lira has began depreciating against the dollar again, simply because investors foresee 2021 panorama, where more sanctions will be added to push Mr. Erdogan into compromises or concessions. And he is not the kind of man who would easily be pushed around or pushed over. This is why Turkish lira is very likely to depreciate for the time being. The depreciation of the lira has two major and devastating consequences on the Turkish economy. A, it boosts inflation, and inflation is already at 14%, predicted to rise to 15 or 16% within the next 3 months. So if you add on top of that what we call the pass-through from the exchange rate, you get to 16, 18, really massive inflation with which the Turkish electorate will not put up. Two, Turkish companies, as almost all companies in emerging nations have borrowed heavily in foreign currency. In the next 12 months, they have to pay off $165 billion of maturing loans and bonds or have to borrow them again. But as long as Turkey has this conflict with EU and the United States, lenders from the West will not attend to bond auctions or to syndicated loan deals, or at the very least, Turkish corporates will have to pay higher interest rates when they refinance their maturing debt. And given the fact that we're under a partial lockdown and sales are down, their ability to meet payments with higher interest rates is very much suspect. So we're talking about a chain of insolvencies or bankruptcies. This is what the sanctions will do to Turkey. Even without them, Turkish economy is in extremely bad position. As you know, confidence is the backbone of an economy. If the agents, that's the households, the private sector, foreigners, have confidence in the government and the potential of the economy, they will spend, they will build more factories, they will invest their money into the country. This is not the case. I can show you several charts from the polls which show that confidence in Erdogan government is at an historic low. But I think the most simple evidence is Turks constantly buying foreign currency rather than holding TL deposits. At this point, more than 50% of total deposits in our banking system are denominated in foreign currencies, and neither the central bank nor Turkish banks have enough foreign currency reserves to cover those. So we're looking at the bank run if the relations with the West go for the worse. Dollarization also makes conduct of monetary policy extremely difficult, simply because it constantly sucks up dollars or foreign currency from the spot market, forcing the central bank to raise interest rates to a point which will topple the economy or push the economy into recession. In fact, we have a central bank monetary policy meeting on 24th of December, where foreign investment banks are already talking about a new policy rate hike of 150 to 200 basis points. I think Mr. Naci Ağbal, our new central bank governor, will have to raise rates by at least 300 basis points unless he risks another run on the lira by foreigners and also by high net worth Turkish retail savers. And that too is extremely recessionary. Also, Turkish corporates, in addition to FX debt, have accumulated huge TL loans this year simply because, well, the economy was stagnating because of the COVID-19 outbreak. And these are very short-term loans. They mature in 6 months or a year, and they really don't have the wherewithal, the cash flow, to pay for those. So higher interest rates is just another nail in their coffin. And finally, of course, COVID-19. I mean, the Ministry of Health finally came clean on the true number of total cases and daily cases. Turkey is now number 8 among nations with over 1.6 million accumulated COVID-19 cases. Daily case count runs around 30,000, and yesterday we lost 220 people to this awful disease. Experience in Europe shows us that when cases reach 30,000 a day, and that's still the official number, independent medical experts claim it could be as high as 60,000. And a government has no choice but to lock down the economy for 2, but better for 4 weeks. And some notable economists in Middle East Technical University, Professor Dr. Voivodoli and Professor Dr. Mr. Errenç, have calculated the cost of doing so. It's 3.5% of GDP, or roughly $25 billion. The government doesn't have that kind of money. I mean, budget deficits, even with huge central bank money fund transfers, are about 4.5% of GDP, and Turkey doesn't have the capacity to borrow abroad simply because its credit rating is too low. We're almost junk. And finally, please watch my previous video where I declared that the Turkish banking system is dead. Already 360 billion TL or $50 billion worth of loans are tardy or non-performing. They'll have to be deferred, but that's like 10% of the total loan portfolio. And if you defer them, as long as Turkey has problems with the West, the economy is not going to improve. So all combined, it's a true mess here. I'm sure Mr. Erdogan will not capitulate easily, and some of the things that the West demands, such as us surrendering Cyprus or our entire Aegean coastline to Greece, are just outrageous. I mean, how you can think you would ever compromise on these issues is just unfathomable to me. But at least he will have to, sit down, negotiate, and compromise on some other issues. What reforms are needed, I will probably shoot another video. At this point, all we need to know is that one way to solve these problems, and probably the only way at this point, is to call an IMF. That can happen in two ways. First, we can tap IMF's COVID-19 relief program, where our quota is something like $10 billion. Honestly, I haven't checked, but it's somewhere around there. And that would at least go to defray the cost of added unemployment and insolvencies and create some economic relief. And also would be a sign that Mr. Erdogan is willing to change his views. As you know, he's very anti-IMF. Better call IMF for a standby with 50 to 80 billion dollars of funding, which will bolster central bank reserves, prevent any kind of possibility of a bank run, and it would ease the burden on the central bank to raise rates, as well as I said, the most important thing, to allocate more budgetary funds to the health system and to people who are becoming unemployed by the day, and small and medium-sized enterprises which are about to throw in the towel. And finally, IMF will lend credibility to any promises of reform. I don't expect Mr. Erdogan to see this truth, but eventually he will. I think within a few months, in 3 months, we will see IMF calling in on Ankara, on the Treasury and the central bank. And if he doesn't, well, either there will be early elections where he and his party, AKP, will lose, and Turkey will have a new administration, or we will have a balance of payments crisis where Turkish entities and the Treasury will not be able to pay its maturing debt. And that's devastation for a country. So this is really a milestone day in Turkey where we're confronted with the reality of our political problems with the West, but our deep dependency on Western money. And Mr. Erdogan will have to resolve this quandary. Until he does so, Turkey is not safe for any kind of investment. Well, I'm not going to have a happy weekend. I hope you do. Please stay home as much as possible and stay healthy. And before I leave, I want to show you a book. Okay, oh, here we go. Uh, Thank you very much for watching another Real Turkey channel video. We would appreciate if you would subscribe or at least recommend this video or others that you may like to your friends and relatives. It makes a great Christmas gift to fill the stockings. Yeşil Ada saying goodbye from Istanbul.